Hey everybody, this is Kyle Knott and I am Not Your Average Finance Guy. Let's talk a little bit about loans today. So with an infinite banking policy, you have the contractual right to take a loan against your cash value at basically at any time. So maybe not all of your cash value, a percentage of, usually like up to 90% of your cash value, you can take a loan for against at any time. So one story I heard a little while back was a dentist office that needed a new x-ray machine. This new x-ray machine was, I don't know, I think it was like 40 grand. Okay. And when they go to these equipment fancy dealers, I mean, they're dentists and I'm sure they're just going to pass the buck on to all the patients, to everyone that takes x-rays. It's obviously going to make them money. But the way these things are structured, some of these equipment loans, it's like, I think it was like almost 20%, 19-20% interest that the company that was supplying this x-ray machine was charging. So what if you knew a dentist that needed $40,000 for an x-ray machine, and you've, lo and behold, got $50,000 of cash value sitting in your infinite banking policy? So if he needs $40,000 and he's about to pay 20%, it's like, hey, what if I gave you the $40,000 and you pay me 15%? Oh, he's gonna be thrilled, right? He's saving 5%. You charge him 10% if you want. Whatever you want to do, you're helping him out. You're making a huge spread. So you're going to take a loan against your infinite banking policy for around 5.5% is where it's at right now. And then you're going to hand him the $40,000, and then he's going to make payments back to you at 10 to 15%. No brainer, right? So he's paying all of your interest, plus you're making a bunch of money. So you're going to have your loan repaid before you know it, and your loan will probably be repaid, and he's still paying you more money back on the backside of it, and you just made some extra cash flow. So that's kind of how I love to use these infinite banking policies. I know there's others out there that use them to buy cars and TVs and boats and RVs, and I guess if that's what you're into, go for it. To me, that stuff all loses value, but you can do whatever you want with it. Nothing spells out that what you have to use this money for. You can use it for whatever you want. All I do is get online, push a couple buttons, and in a day or two, I've got a check in my bank account, and I can, absolutely no questions asked. I don't have to fill out a credit form. They don't have to ask me a bunch of questions, stupid questions, how much I make and what's your 401k worth, and send me all your statements and all that bullshit. I literally, if there's cash value in there, I can borrow against it. End of story, period. So use those loans and make more money against those. Use that arbitrage. Pay that thing back. Go find another dentist. Go find another doctor. Go find another investor. I mean, a lot of investors need money just for short term. Maybe they're doing a short term flip, and you're hooked in. You can secure that house, and you got a lien against it. So if he doesn't pay you back, now you can take the house. Basically, you can do notes. You can do whatever you want. There's all kinds of positive arbitrage. So as long as you get this policy going and get it built up a little bit, man, the policies are really endless. And this is truly how the wealthy build and keep getting wealthier. So let's all get wealthy with them. And if you got any questions, please try to put my email address on here. Let me know. I love talking strategy and figuring this stuff out, and be happy to help you. And we'll go from there. So, all right, good luck, everybody. I hope this helps, and we will see you later.